Hello investors, welcome to Simpli Stocks. Continuing with our March quarter Q4 FY26 result series, today we are going to study three trending jewelry businesses that operate in the same segment. In today's video, we will discuss Sky Gold, Shanti Gold and Utssav CZ. I have covered Sky Gold multiple times already in our Simpli Stocks community and then also on our channel. And when it corrected significantly around, I guess, the beginning of February this year, we made a dedicated video especially on it, highlighting how the long-term scope of this business is really very good. Anyway, the results of all three of them have been very good, and because all three are almost the same business models, I thought I should cover them together to do a side-by-side comparative analysis for you. This will give you a good idea that which among them is the best. Now, without any delay, let's quickly get started. Now, we will not spend too much time on their business model. Their business model is fairly simple and straightforward. All three of them are B2B jewelry manufacturers. In simple terms, they manufacture jewelry for retailers such as Kalyan, Titan and Malabar and others, who then sell those products or let's say jewelry pieces to customers like us. Among these three, the smallest player is Utssav. Its market cap is around 700 crore rupees. Then comes Shanti Gold. Its market cap is around 1500 crore rupees. And the biggest one is your Sky Gold, obviously, with a market cap of 8000 crore rupees. Among these, Utssav is a SME player or SME stock. So obviously, it is not ideal for small portfolios. And because it is an SME, they don't announce quarterly results. That is also a problem over here. So while we will be looking at Q4 performance of Sky Gold and Shanti Gold, which is your January to March 3 months, for Utssav, we will be looking at H2 results or basically the 6-month period from October till March. So please keep that in mind while comparing the numbers. And one more important thing that I want to tell you is that the promoters of Shanti Gold and Utssav CZ are the same. And in their con calls also, analysts ask this multiple times that both these businesses are the same, right? On this, the management did list some pointers that management teams are different and other distinctions. But I'll say that both these businesses are almost the same. I'll say only the size is different. So in such a case, I will not be surprised if a merger of these companies happens, let's say 3 or 4 years down the line. Now, these two were listed only last year, but Sky Gold has been in the market for a long time now, and their management's track record and execution have also been super solid throughout these years. In Sky Gold, you might feel that the valuation is slightly higher compared to Shanti and Utssav, but in a way, you are paying a premium for trust, corporate governance, and size. And I'll be talking more about this going forward. Now, let's quickly come to their recent Q4 or H2 results and let us start our comparative analysis. So in Q4, you will see here that Sky Gold sales were 1900 crore rupees approx. Shanti Golds were about 670 crore rupees and Utsav sales in H2 were around 680 crore rupees. If you look at YOY growth, Sky Gold has grown by 81% compared to the last year, Shanti by 122% and Utsav has grown by 88%. Now you will see that growth of Shanti and Utsav is higher than Sky Gold, but do not immediately start thinking that Sky Gold is bad in comparison to them. And understand one thing here, that as base gets larger for any business, some slowdown definitely comes, and that is completely normal and it is not even a negative sign per se. And on the other hand, since Sky Gold has become big in size, they are benefiting from other things. And we will talk more about this later. Now, as for EBITDA growth, compared to last year, Utsav's EBITDA increased by 99%, Sky Gold's EBITDA grew by 123%, and Shanti's by a massive 217%. And the EBITDA margin in Q4 was 7.4% for Sky Gold, 10.2% for Shanti, and 7.2% for Utsav in H2. And if we look at the net profit in Q4, Sky Gold has reported a PAT of 90 crore rupees approx with a growth of 137%. That is very good. Shanti Gold made a profit of 52 CR with a massive growth of 465%. And Utsav made a profit of 30 crore rupees in H2, which is a 95% growth compared to the last year. But Shanti Gold's PAT growth, firstly, you see, although it is high, it is very good actually, 465%. But you have to understand that it is firstly on a low base of last year, and then also because of one-time gain in margins. With this, let us also look at net profit margins. So Sky Gold's net profit margin during Q4 was 4.8%, Shanti's was 7.9%, and Utsav's was 4.5%. Here you might think that Shanti Gold is a better business than Sky Gold, like their margins and then YOY net profit both are so good, right? But what happened was that both Shanti and Utssav had their IPOs last year. At that time, what they did was that they bought gold with the IPO money and then kept it. So when the gold rallied, they got the benefit of inventory gains. And because of this reason, their PAT margin is looking higher. But the management of both companies has clarified that they will now come back to the normalized PAT margin of 4.5%. Now a humble request. You are seeing that we are doing so much in-depth research just for you. We are taking, notes of all the little things so that you can make informed decisions. So if you are liking this video so far, please give me a thumbs up. Also, you can subscribe to our channel Simpli Stocks, where we bring multiple such videos every week. Because for us, honestly, your likes and subscribes are our only motivation, so that we keep bringing such high quality research to you, in-depth research to you for free. So do like this video, and yes, also subscribe to our channel. Now with this, let us get back to our discussion and quickly look at their FY26 results. So Sky Gold did sales of about 6,300 crore rupees last year, or the full financial year FY26, which marks 77% growth compared to the previous year. Shanti did sales of about 2,000 crore rupees, 83% higher than last year. And Utssav also did sales of 1,155 CR with about 80% year-on-year growth. The EBITDA for both Sky and Shanti increased by 121%, and Utsav's increased by 132%. Now, looking at the EBITDA margins, Sky Gold's was 6.9%, Shanti's was 9.9%, or about 10% we can say, and Utsav's was 8.1% or 8%. Now, talking about the PAT or profit after tax, the full year PAT for Sky Gold stood at about 280 crore rupees, Shanti's at 140 CR, and Utsav's at about 60 CR. And looking at YOY growth, Sky Gold's net profit grew by wonderful 112% compared to the last year. Shanti's grew by even more, 160% approx, and Utsav's by 136%. And in the same direction, let us look at PAT margins too. Sky Gold's net profit margin for the entire year was 4.5%, Shanti's was 6.9%, and Utsav's was 5.1%. Here too, you will see the same thing, that due to the inventory gains, the margins of Shanti and Utssav have remained healthier compared to Sky Gold. And see, for jewelry businesses, even half or even 1% margin difference is a lot, because your product itself, gold, has such a high value, and then their income comes as a percentage on top of it. Now, so far we have seen that Utssav and Sky Gold are almost on the same level, and Shanti Gold is looking much better. But you must understand that between Utssav and Sky Gold, that despite being a business 10 times larger than Utssav in size, Sky Gold is growing just as fast. And as for Shanti Gold is concerned, their margins only had one-time benefit. So it isn't like that you can say Shanti is the best among the three. And also between Utssav and Sky Gold, I can say that Sky Gold is much better, because despite being larger in size, they are as good as a company or a micro cap company. Plus, with the time, slowdown will also come in these two businesses, Utssav and Shanti Gold. And you should understand that based on FY26 numbers, there is not very big difference in their sales growth either. So that is also there. And with this, let us move forward and look at how much manufacturing capacity each of them currently has. So that is also something important. So right now, Sky Gold has a capacity to manufacture around 14,400 kg of jewelry every year, and their utilization is currently at 55%. Further, they will move to an asset-light model by selling the land they own in Mumbai. Money that comes from it will be used to reduce debt. They have enough capacity until FY28, and after that, they will look at further capacity addition. Shanti Gold currently has a capacity of 2,700 kg, which is located in Andheri, Mumbai, and this is currently at 65% utilization. They are bringing additional capacity of 4,000 kg in Marol, Mumbai itself, and about 1,200 kg in Jaipur. So by August or September, their total capacity will increase to 7,900 kg. On the other hand, Utsav's current capacity is at 2,500 kg of jewelry manufacturing, which is in Ahmedabad, and this too is at 65% utilization. Now, their management's target is to increase this gradually up to 6 or 7,000 kg, but as such, they have not given any clarity on how fast they are planning to scale up. Therefore, if you ask me, here again, I see more clarity and clear visibility of growth in Sky Gold and Shanti Gold compared to Utssav. But overall, looking at 3-4 years down the line, both Shanti Gold and Utssav are planning to almost triple their capacities. Now, as for Sky Gold, it already operates on such a large scale, like they already have sufficient idle capacity. Their focus is also on increasing capacity and business, but from here on, they are more focused on improving margins and then generating free cash flow to create value. Because see, what happens is that B2B jewelry businesses face the biggest problem in cash flows. Like if you want to keep growing, then whatever profit you make, you have to put it back into the inventory to buy more gold so that you can make jewelry out of it and then sell it more. And then there the growth comes. But Sky Gold has finally come out of this cash flow cycle, or let us say trap. They are earning enough cash profit, which is much more than their inventory addition. In comparison, for Shanti Gold and Utssav, that will remain high for the next, say, 2 to 3 years at least, and there might be nil free cash flows as well, because all the profits will go back into the inventory to support future growth. And institutional investors also prefer businesses like Sky Gold more. Like their return ratios are better, fundamentals are stronger, and then re-rating over here also happens very quickly. Shanti and Utssav are quite behind, I'll say, when it comes to all of this. Now, let us quickly look at their growth guidance for this year. So, Shanti's management has given an estimate of 4% net profit margin, and Utssav has given 4.5%. Sky Gold's management gives long-term guidance. Their margin this year in FY26 has been 4.5%. We can consider the same moving forward, although we are being conservative that because they exited, I'll say, the Q4 with a 4.8% margin. So definitely I think they can do better than 4.5%. But anyways, let us go with that. So for FY27, Sky Gold's management has given a sales growth target of 8,100 crore rupees. Shanti's management is targeting around 4,000 crore rupees top line, and Utssav is targeting about 1,850 crore rupees in sales. In Utssav, we will see around, say, 60% top line growth. In Shanti Gold, almost full 100%. And in Sky Gold, a slightly slower growth of around 30% compared to the last year. But see, this 8,100 crore rupees for Sky Gold is an old guidance. I expect that they will be upgrading this mid-year. And in my understanding, Sky Gold can post at least 40 to 50% top line growth this year. Now, if we take net profit margin assumption, or let us say guidance of 4% for Utssav and Shanti and 4.5% for Sky Gold, then Shanti Gold's net profit this year in FY27 should be at 160 crore rupees, Utsav's around 74 to 75 CR on this estimated profit. If we look at 1 year forward PE for FY27, it comes out to be 9 to 10 for both Shanti Gold and Utssav. As for Sky Gold, again, their guidance is conservative, or let us say we are taking conservative numbers, but Sky Gold's PAT this year can be about 365 crore rupees, and based on this, their 1 year forward PE comes out to 22. But you also have to understand that since Shanti and Utssav both got the benefit of, let's say, inventory gains last year, so their last year base is high. And because of that, they are not going to get any significant growth this year in their EPS or net profit. And that is also why market is giving them such a low PE right now, because there is hardly going to be significant growth this year. But here too, I'll say so far, Shanti Gold and Sky Gold are better and ahead of Utssav CZ. And on top of that, because Utssav is an SME, there is liquidity risk also separately, and it is not ideal for small portfolios either, which I highlighted earlier. Now let us calculate the exit PE of these businesses. according to the management's guidance or let's say vision, and we can then see their long-term potential. So we have the FY26 data of these companies with us, which is the base year. Then we also have their long-term vision. Now, broadly by FY30, Sky Gold's management is targeting sales of about 18 to 19,000 crore rupees with a net profit margin of 5.25%. But this PAT guidance, again, they have given is very, very conservative and old also. And I'll tell you why. So first thing is that they are working on reducing their debt, which I told you, by selling their land. And because of that, their interest cost will absolutely become zero, and an improvement of almost 2 percentage points or about 200 bps in margins will come just from reducing debt or interest cost. So the 5.25% margin for FY30, that guidance they have given is conservative, and they are not including all of this in that. Apart from this, they are gradually shifting to the advanced gold model or AGM. Now, what is AGM? So that is basically your job work business. The way industry operates is that you bought 50 kg of gold, made jewelry out of it, and then you are selling it to a retailer. So in your accounts, what you will do, you will record the sale of that entire 50 kg of jewelry, in which the main portion will be the gold value itself, which also you had to buy from your own money, right? So your profit will be very low as a making charge, and your money is also getting blocked. But what happens in AGM is that retailers like Kalyan or Titan give their own gold to the manufacturers, and these people make the jewelry and give it back. So in this, they do not record the value of all that gold. They will bill only for the making charge or the fees. And because of this, the sales you get won't look that heavy, but margin wise, all of it will flow into your EBITDA and net profit. Plus, cash requirements in the business will also come down. So these two are very major triggers, or let us say benefits, that Sky Gold has, which they are able to get only because the company has become large in size. The market or their clients are finally trusting them. In comparison, Shanti or Utssav will have these levers after the next 2 or 3 years. Their debt to equity ratio and interest cost will remain high till then, and there won't be free cash flow either, meaning that these two are more like your earnings growth models. And Sky Gold will create value for its shareholders by improving margins and improving fundamentals. Anyway, let us come back to the margins. So this means that their net profit margin can easily stay around 6.5%. But let's say for our analysis, let us stay conservative and take an assumption of 6% PAT margin for Sky Gold for FY30 and 5% for both Utssav and Shanti Gold. So 4 to 5 years from today, based on the top line guidance given by the managements, Sky Gold's net profit can be around 1140 crore rupees, upwards of 1100 CR. Shanti Gold's around 593 CR or about 600 CR. Utsav's around 225 CR. And looking at it growth wise, Shanti's projected sales CAGR turns out to be highest at 56%. Utsav's at 40%, and as for Sky Gold, about 30 to 35%. But remember what I told you about them coming onto the AGM model. You might think that top line growth is lower, but understand that margins will get very, very better from here. And the same thing is getting reflected in our analysis too. The net profit CAGR growth for all of three comes out to be around the same 40% mark. So even though Sky Gold's base has become large, you are getting margin expansion, corporate governance, track record, and then the comfort of size here as well. Now, when this video was being recorded, Sky Gold's market cap was around 8,000 crore rupees, Shanti Gold's was 1500 CR, and Utsav's was 700 CR. But think about it this way: 4 to 5 years down the line from today, when they will be bigger in size than they are today, like Sky Gold will be doing good sales of about 19,000, 20,000 CR, and the market situation will also be better. Like right now there is war, fundamentals will be better. Then these companies will still get a PE ratio of just 15 or 20, or Sky Gold will still just get 30 PE. So what I'm about to, or what I'm trying to tell you is that as businesses get bigger in size or better in size, the market also gives a premium for size and stability. So the market will give a higher PE ratio to Sky Gold or Shanti, which we call the, let's say, exit PE in our analysis. Now, you can take your own different assumptions on the exit PE. Like here, I am about to take an exit PE of 20 for Utssav, 25 for Shanti Gold, and 35 for Sky Gold, meaning that 4 to 5 years from today, these stocks will be trading at these respective PE ratios. And you can make your own bull or bear cases and take even different exit PE multiples, but I have kept a single one for simplicity. Now, anyway, according to this, 4 years down the line, Sky Gold's market cap comes out to 40,000 crore rupees, Shanti Gold's 15,000 crore rupees, and Utsav's 4,500 CR as per my calculations. And this translates into 50% CAGR growth for Sky Gold, 75 to 80% for Shanti Gold, and 60% type growth in Utssav from current levels. Now, if I summarize, I personally do not like Utssav that much in comparison to Sky Gold and Shanti. One, the risk of being small in size is there, and then the growth or opportunity here is also not that good. Like in comparison, I am getting similar opportunity in a much larger business, Sky Gold, and I am getting the same growth there. Plus, that large size, or let us say that track record of Sky Gold, it gives me more peace of mind, right? Because it is fairly a large old business. So I am getting the same thing in, let us say, a bigger stock. So obviously I will go for that. And as for Shanti Gold, new investors who do want, let us say, growth may like that business. But personally, I know that probability wise, I can trust this 50% CAGR growth in Sky Gold more. Like I can say with a higher certainty that they will be able to achieve that, because I have been invested in this business for a long time now, and I like their management quite a lot. Or you can also call it my bias, that is also there, because along with returns, I also want peace of mind, because as I'm putting big money upfront, so my first preference will remain with Sky Gold. But yes, Shanti Gold, if they execute well, hopefully they should do well too. That is up to you which track, or let us say which way you want to go. Now with this, you tell me in the comments which business among the three you like the most, and also tell me for the next video for which stocks from the same sector should I bring a comparative analysis for you. And yes, if you like this video, do please give me thumbs up, and also subscribe to our channel Simpli Stocks, because making such videos takes a lot of time and effort. And if you support us, we will be able to bring more such videos for you. With this, I'll see you in the next video. Happy investing.